welcome on board the next management on the show. We have with us Mr. Ved P Goel, the Group Chief Financial Officer, Dr. Lal Pathlabs, joining us on the show. Hi, Ved. Thank you so much for making time and speaking with us. Well, in the latest development, the government has revised the rates of 36 radiology, imaging, investigation, and the other CGHS rates, etc., have also been increased. Does it impact your business a lot? Could you talk to us about if yes, what would be the impact? You'll have to unmute yourself, Ved. I think we can't hear you properly.
Sorry.
Sure.
Hi, good morning. So these increase on these CGHS rates are increased for radiology, not pathology right now. So we don't have much radiology in our system, so there is not much impact on our business due to this increase.
Increase in pathology as well? If yes, what's the timeline of that revision?
As of now, we don't have any idea, but yes, there is a conversation going on. They are supposed to increase rates for pathology as well, but as of now, there is no news.
What are the rates which are capped in the entire pathology business? Because our understanding is that right now for test, it was only during COVID when there was a price cap, but right now firms and companies which are offering this service, they're free to charge whatever they want.
Yeah, you are right, Nikunja. So there is no capping as such, but during pandemic or during special occasions, whenever governments step in, they cap prices. Like we have seen in COVID, they have capped the prices for COVID RT-PCR test. But right now, there is no capping as such.
I want to also understand that what's happening in the entire pathology business. There was the sugar rush which happened during COVID. Everybody had to test. And it was not the COVID RT-PCR test, it was the accompanying test of a D-dimer or perhaps a CRP, which in a sense was really helping the industry get an extraordinary profit bulge. Do you think large part of that COVID sugar rush is over and now it is back to the pre-COVID business growth for the pathology business?
Oh, yes. This COVID is no more. In fact, for last couple of quarters, if you see our contribution for COVID business is about 2%, 2.5% for the full year, the last FY22. So I don't think now there is COVID business which is happening. Whatever is happening is largely for the travel or some basic surgery kind of requirement. But having said that, we since beginning was focused on non-COVID business. We have narrated that this is not sustainable. This is not, stay here. And that's where our non-COVID growth is very, as per pre-COVID levels. We have already achieved whatever pre-COVID level we were doing. So we are back on track in terms of non-COVID. And anyway, we are not factoring any COVID business for the future. As far as, industry, I think the whole industry is, in my view, is, doing whatever pre-COVID levels. And I think after this COVID or during COVID, the expansion in terms of spending on, especially on healthcare, including diagnostic, has gone up. So industry size, industry opportunities definitely has gone up. Within that, specifically, if I talk about diagnostic, is more beneficiary because now the more and more tests are happening or people are more conscious about health. So I think overall industry is growing or should grow faster than what pre-COVID level.
Ved, would you help us understand the trend in terms of what's the volume of patients been like over the last couple of months and what's the revenue per patient? Have you taken any price hikes recently?
Yes, so revenue per patient has gone slightly up because of two reasons. One is mix change because we have SwasthFit, which has contributed highest. I think it is now more than 20% of our business, which has higher realization per patient as compared to normal individual tests. So that is one. Second, yes, we have taken price increase in the month of Feb, which is also given an impact on annualized basis. It is about 2.5% kind of increase from price increase.
Morning. Wanted to also understand what the outlook is now when it comes to your growth rate. Has that taken a bit of a slowdown, largely on the back of the fact that we have seen the entry of newer players?
I think it was more noise during COVID or post-COVID, but honestly, last couple of quarters we have seen that competition is not that aggressive, especially when we talk about new age players or e-commerce players. Uh, so I have seen that last couple of quarters, this is now stabilizing and not much aggression I have seen. Having said that, competition always there in this industry. If you see, we are the largest, we are the market leader. In spite of that, we don't have market share of more than 5-6%. So it's a very unorganized. We have seen competition earlier also, but this competition is was very different as we have seen in during COVID days. But right now, I think it is stabilizing, and no more it's like freebies or people were throwing hefty discount. I think there is price increase also taken by some of these players. So I believe now it is stabilizing here.
I'll look at the broad picture here. The broad picture here is that there is one disruption which is happening because of the online diagnostic tie-ups. Whether it is Pharmacy and Therocare, Tata's have moved into it, Reliance is giving that service. That makes it a platform service. If you have a prescription of a doctor, you get the diagnostics and you also get the medical advice and you also get the prescription medicine all in one platform. Is that going to be a disruptive challenge for a standalone diagnostic firms like Dr. Lal? Because what you are offering is one unique service, but what diagnostic online businesses are offering, they're giving a complete platform solution.
I think there is, debate whether it is one integrated service, which is, where people can avail all the services on one platform. And we have seen, in fact, the players who have started integrating service. It is called a platform or integrated platform where you can go. And you are right that prescription is one. One can have consultancy, one can have medicine, one can have diagnostic from the same channel. But here it's not that always people opt for this kind of, they have to make choices. And if your platform don't have choice, let's suppose if I want to do a test from one particular diagnostic, then they have my name also. And by the way, we also have tie-ups with these all integrated players, though we don't have much business from that. But people wants choice. Let's suppose you have given Therocare and Pharmacy, example. If I want to do test from Therocare, then I don't want to visit, Pharmacy side, because Therocare also have a independent website. So I don't think integrated service is where always preferred, because there is a choice which is more important. People have to choose which diagnostic, which player they have to test. It is convenient that one prescription, one platform, but it is not always the case where people just visit because they want that integrated service from one player.
And wait, just before I let you go, wanted to understand your wellness business, which is Swasth Fits. Its revenue contribution has jumped up from 13 all the way to 22%. Where is it expected to head, let's say, in the next 12 to 24 months?
I don't think we have put in any numbers, but the way it is going, I think there is a potential where people opting more and more bundle packages. They find value for money in this because we give discounts here, and they also don't need to visit again and again. And same time, it is beneficial for us because my servicing cost is very high, and if I service same patient, even if I give more tests to same patient, it makes sense for me. So I think I'm not putting any number, but directionally, I think more and more people are opting for this, and this is very, good way of increasing realization and increasing profitability as well.
Okay. So can we assume that a 15% growth and a 25% margin is really a realistic number for FY24 for Dr. Pathlab?
So Nikunj, I'm not commenting on the numbers, but directionally I can tell you, I mean, we are at a level where pre-COVID days. So whatever I think I can tell you past, but not the future. But in the last year we did about 15%, revenue growth, non-COVID revenue growth, which includes suburban as well, because suburban was not there last to last year. So it has an impact of suburban also. But if we see last 4 years CAGR, it is about 10-11% CAGR for last 4 years on non-COVID business.
Okay, we'll let you go on that note. Thank you so much for joining us today.